Hey everybody, Rob Maurer here. Happy Friday. Today we are talking about some news on Giga Berlin expansion plans. Also got updates on Elon Musk's Twitter acquisition, of course, the personal consumption expenditures report, some news from GM, and some news out of the EU. So looking at the stock, Tesla today up 1.5% to close at $228.52. NASDAQ up almost 3% on the day. So a little bit of an underperformance today. Maybe not what everyone was hoping for with the acquisition of Twitter now being completed, which we'll talk about in a second. Of course, the Twitter overhang, famous words, but no such reaction from that today. However, definitely worth noting that for the week, Tesla is up about 8.2% versus the NASDAQ up 2.2% on the week. So we definitely have seen outperformance from Tesla on the week. Of course, as people have realized that, at least for this week, Elon not having to sell and the deal now closing. So, of course, Elon last night tweeting out the bird is freed. A lot of articles today and last night about people already being dismissed on the CEO, CFO, chief, other officers being dismissed, and sounds like some engineers already as well. So Elon making moves here pretty quickly with Twitter. One thing to note on just kind of the overhang and the sales, we don't really have the final distribution of how the Twitter acquisition has gone down in terms of equity, debt, possible margin loan for Elon. If there is a margin component for Elon still, which we've mentioned many times as a possibility, we could still have a little bit of this, Twitter overhang, as there could still be uncertainty if Elon would eventually sell Tesla to fulfill that margin loan, or to eliminate that margin loan rather. So we might not be completely free of that, but still nice to see this deal now concluded. All right, personal consumption expenditures. We did get this report this morning, largely coming in at expectations. So core personal consumption expenditures, excluding food and energy, that was up 5.1% year over year, so slightly higher than what we've seen the last few months, but in line with expectations. Month over month, core PCE came in up 0.5%, so it is still running pretty hot. Unfortunately, this chart has not been updated yet, so it's a little bit off there. This is the August number, but September you can see here, up 0.5%, basically in line with forecast. So of course, next week we'll head into the FOMC meeting on Tuesday and Wednesday, then the interest rate decision, that'll be in the afternoon on Wednesday. Of course, the press conference to follow that. Looks like expectations have shifted a little bit down this week in terms of interest rate increases. So there's a decent percentage expectation for a 50 basis point hike, at this point about 16%, versus where we were a week ago, about 5%. So we've talked a little bit about some of the pivot language that's come out, I think, from San Francisco's Fed president, and there have been a couple of other reports along those lines too. So we'll see what happens. Probably less about the actual interest rate increase if we do see 75 basis points, which obviously more likely, and more about what the language is in the press conference and things like that, if that indicates a slowdown in these rate increases. All right, getting into Tesla news then. So probably the biggest news for today is an update on Giga Berlin. So this is coming from Moz.de. This is paywalled, so we'll look at Tesla Meg's article recapping this. So basically what Tesla is planning to do here is to create 70 hectares of additional space. So for us over in the US, that's about 173 acres. Right now, Tesla has cleared about 160 hectares so far. So this would be about a 40% increase in their available space at Giga Berlin. So pretty significant amount of land that they're planning to begin clearing. It sounds like as soon as this evening, according to the Moz report. So they say that the northern part of the areas of the property to be cleared will be cleared for the planned next expansion stage of the Gigafactory. Tesla is apparently reported to have explained in a message to Grünheide's, the municipality of Grünheide. So even though we've heard a lot of different reports about Tesla, maybe because of the permitting process and all of the accompanying timelines that we have seen there and some of the shifts, there's been a lot of speculation that maybe Tesla would be more hesitant to expand, but it does sound like some of those expansion plans are now continuing at Giga Berlin. Got a tweet from Jörg Steinbach here too. We'll hop over to Twitter so we can translate that. And he said, he's of course the Minister of Economics over there. I am pleased that Tesla is continuing. This is a good sign. Tesla is focusing on Brandenburg. Our country is developing into a place of modern mobility. as the largest industrial employer and trainer in Brandenburg, Tesla has played a decisive role in this. So again, a pretty big expansion here for Berlin. They'll still need to go through any of the permitting processes that we have seen Tesla do before. That will still involve public commentary periods. So we shouldn't be expecting another building for the factory to be popping up anytime necessarily immediately. But at the same time, we've seen Tesla work ahead of pre-approvals or work ahead based off of pre-approvals before, waiting for that final approval and kind of carrying forward construction at their own risk. So as Tesla is already beginning to clear these trees this evening, it sounds like, hopefully, we won't have to wait for all of these approval processes to be complete before we start seeing Tesla work and put some more buildings up there at Berlin. So definitely some exciting news on that front. Next here, just a couple of quick, corrections or context that needs to be provided. So in Denmark, Tesla has increased the prices of the Model Y long range and performance, or so it seems based on the design studio. My understanding after reading a little bit about this is that this is basically just a tax change in Denmark that's affecting these vehicles. So I think Tesla is now just showing the impact of those tax changes. So I don't think there's been any price increase there. That perhaps would have been interesting if we had seen price increases in Europe, potentially balancing out price decreases in China, which of course we had talked about before. But I don't think that is the case in this situation. And then there was a lot of discussion on Twitter last evening about how a lot of different mutual funds in their 13F filings this quarter had apparently made significant increases to their Tesla stock position. The problem is that was just based on looking at share counts from this 13F versus the last 13F. And of course, as we can see here for Baillie Gifford, which is one of Tesla's biggest shareholders, and it is their biggest position. If you look at the increased number of shares here, it's 3 times the amount that they had before. During this period of time, we of course had the 3-for-1 stock split. So that's the only thing driving this. There's, of course, they're going to make position changes as well, but certainly have not tripled their position in the last couple of months. So if you did see any reports on that, that's kind of what's going on. Just people misinterpreting the 13F filings based on the stock split, which is pretty common around those events. All right, last couple of things here. So we've talked about this story a few times, but it sounds like the European Union has now reached an agreement for a ban on internal combustion engine vehicles by 2035. So again, we've talked about this. It's always kind of been in this proposal stage and definitely looked like it was going to be happening. It sounds like this is kind of the final step in making that happen. It's also interesting that this deal does include a 55% reduction target for CO2 emissions by 2030. Previously, the target was 37.5% reduction by that point in time. So even before that 2035 target, there are some steps along the way that will need to be met as well. Like we had talked about last time we talked about this topic in particular, they did kind of add a little bit of an element that the vehicles could still be combustion propulsion as long as they're operating on carbon neutral fuels. So that was something that was kind of added in the discussion stages over the last couple of meetings on this topic, and might leave a little bit of a loophole for some things. What technically gets qualified as a carbon neutral fuel, that remains to be seen. Hopefully it doesn't end up being that case, but there is at least a little bit of a gray area in that regard. Also highlighted here, kind of interesting, they have said that niche manufacturers, including Lamborghini, which produces a small number of vehicles, will receive a 1-year delay on the emissions targets. So presumably that's for both the 2030 deadline for the 55% reduction, although I'm not sure exactly how they distribute that out by manufacturer, and then the, of course, the 2035 ban as well. So I'm not sure how much difference an extra year makes, but I suppose, nice for those manufacturers to have that, I guess. All right, next up, last thing here, we've got an update from GM. Electrek caught this, a good catch by them. Earlier this week on GM's earnings call, they were asked about the electric vehicle tax credit with the upcoming Inflation Reduction Act. And Mary Barra did say that they think that out of the gate, they're going to be eligible for half of the credit, so $3,750 versus that full $7,500 credit that is allowed. They said that they'll ramp up to have full qualification for the $7,500 credits in the next 2 to 3 years. So kind of interesting to see that. We haven't really heard a whole lot. Of course, we're still waiting for final clarification from the government on exactly how these qualifiers are going to be interpreted, essentially. So we should have that, of course, here in the next 2 months before the end of the year. But that is GM's sort of initial assumption right now. My guess is that that's based on the critical minerals part. They're probably not qualifying on that quite yet, versus the battery components part, which is probably a little bit easier for them to hit early on. So kind of interesting to see that. Again, we heard Elon talk about it. Elon said that they'll be fully meeting that. They didn't really give us as clear of a timeline as to what that meant, and the other executive that was commenting on it had a little bit more uncertainty expressed. So we'll see what kind of information we get from Tesla on that as well as we head into the end of the year. All right, I think that is it for today then. So as always, thank you for listening. Make sure you are subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you on Monday for the spooky October 31st Halloween episode of Tesla Daily. It's probably not going to be spooky. Just set your expectations accordingly. But we'll see you then. Thank you.